show, my normal show. The Tiger Technicians Hour is Monday, Wednesday, Friday, 11 o'clock till noon. And then, of course, on Monday and Wednesday at noon, Larry comes in. And so what we have today, we've got 12:15 starts a kind of a preamble to the 2:15 Fed speak. And rather than try to guess what they are saying, after all, we know that, let's put it this way, there are three things that are going on. One is that on the basis of what they look at, that is an expansion of jobs, earnings per hour, a whole bunch of economic factors. There have been some very disappointing numbers. There have been a couple of good ones, but mostly it's not where it should be at. Number two, when you're looking at this picture from their side, theoretically, what should be happening is that the Fed should not be the barometer by which, or the leading indicator by which economic policy is made. But in fact, the reality of the matter is that the Fed has poured money and printed money, and it has worked. If you look at the Dow, if you look at the S&P, they are much closer to the all-time highs than the all-time lows, or at least all-time highs to the most recent lows of 2009, historically speaking. In fact, they are within a small percentage of the October 2007 highs. There's a political factor that comes in. I had, after my discussion the other day in my show, where I was talking about how easy it should be for the two parties, regardless, it wasn't a political staging at all. It was just an observation that historically the best campaigns have been led when there's just a 2 or 3 word slogan, and I'd come up with a couple of slogans for each of them. But in this particular instance, you cannot, it's almost impossible to imagine that under this big umbrella of everything that the Fed is doing, desperately trying to look as if they're totally independent of politics, there has to be, maybe it isn't a political slant, but there has to be a bias towards what's going on now in relation to everything else that they've done, and therefore there is perhaps a bias. So let's ignore all that stuff and just say, hey, where are we in the charts? Well, 877-927-6648, that's where we are in the charts. If you go to Tiger TV right now, you will start to see the charts that I'm about to post. No, that I am posting, that I'm about to post when I go to the TFNN URL, I want to see the charts myself right here so that I know that I'm showing them to you in the best possible way. Now, let's go to the ESU, and that's the E-mini, S&P E-mini. At this particular point, it is at 1438.25. I'm looking at the September contract. I could go to the December. Hey, it's the same chart except it's looking out. I wonder if I think I started doing it. I was actually doing it in white as well. Ah, there it is. Okay, so we've gone to the December contract. So the December contract, actually, it's interesting because the December contract is just a tad different because, let me just check. Yeah. There's an alternate wave count right now. When I talk about alternative wave, let me just briefly go through my methodology so you know where I'm coming from. I look at chart patterns just as Larry does. Larry looks at chart patterns. He looks at very specific chart patterns. Basically, he looks at the Gartley and he looks at the butterfly and the Gartley. And I could make those up because they are part of the patterns that I'm looking at, but I would have slightly different price points because I would have to go to a Chapman wave methodology price point of importance. I would not be using the fib numbers per se. So I'm going to just skip that step right now. What we've got here, now I'm on the December contract, doesn't matter to me. In the December contract, you'll see that I'm about to color in one of the lines, one of the channel lines. And this is something that is like a border an inside border to the larger channel. Let me just highlight. Do you see that top line there? That top line in green is the outer border of an up channel made by joining at least 2 to 3 or even 4 price points at the outer edge. Usually they're the outer edges of the candle. Sometimes they hit the body, but mostly the outer edges, based also on the bottom part, which is usually at least 2 points, which is exactly what we've got here from the low of, now what was that? That was the 4th of June at 12.50. This is December contract, to the low of 25th of July at 13.14. You join those, and there you are. We've got 4 parallel lines. Let me explain something about this. It is such an easy task. I love teaching these techniques in my Master Trader series. We go through these, we practice these, and once you start doing them, it's almost impossible not to say or ask the question, how come the price doesn't know when it's going up that it's going to hit a price point of resistance, or when it's coming down it's going to hit a support level? How on earth does a diagonal? I understand horizontal charts because fund managers always remember these things. It's just indelible in their mind. 666 on the S&P, you break that and it's the end of the world. That's on the downside. No, those are the numbers. But horizontal, diagonal lines, rising trend lines, or low? Well, I put it in another context. What I look at it, this is a price point of human nature. And because of that, we get excited and overexcited and underwhelmed and disappointed in the same proportions. So most of the time you can look at chart patterns. Let me show you this one here. I believe this is the one, CTZ. I was going through some of the futures a little earlier on. Yeah, look at this. This is cotton. Look at the way there's such a beautiful symmetry. You know how people always say, not people always say, many people always say, that you come down quicker than you go up? Well, wait a minute. Cotton, this is the December cotton number 2 contract, went from a low in the weekly chart on the 9th, the week of the 9th of July at 72.75, went all the way up to a peak F, then an unusual right arm extension to a peak G, right at, on the 10th of June, the week of the 10th of June, at 107.20, and lo and behold, there's a left side, right side price match in exactly a measured time. Well, I shouldn't say exactly because, gosh, it's 1 week off. 1 week off in a chart that goes back to last July. July of 2010. That's 2 years. And it misses it by 1 week. So, as far as I can see, and this is very important, price comes down, even though there might be little crash bars like that big plunge in cotton the week of the 11th of May, it still comes down in the same, it goes up, and then it comes down in the same time frame. From the left side to the right. 1, 2, 3, 4 months, almost 4 months up, almost 4 months to the downside. Now it's bouncing. That's part of the technique on my CD introducing the Chapman wave methodology. The arch or dreaded H, the H lowercase h formation or the cup formation have the same kind of requisites, I should say, prerequisites. That's what you would expect. So now let's go back to our E-mini chart. So the E-mini chart is right now at ESZ is in an up channel. Nothing wrong with the up channel. I use certain technical indicators. Here's the MACD, the moving average convergence divergence. Here's the slow stochastic. Standard measurements on those. The MACD is 12.26.9. 9 is the differential between 12 and 16. And the stochastic is 14.331 and 20% and 80%. Now, what am I expecting? I'm anticipating that there are patterns, because they repeat over and over again. I have to consider, and now I'm going to go to my Dow chart, because I show this to my subscribers on my opening call, my daily, very detailed description of what's going on in the various markets with price points of to watch on the upside and the downside. that there is a cup formation. Remember, I was just talking about this arch. Well, the cup is an inverted arch. So the cup formation, left side, right side, price time match, breaks it exactly to the day on the 11th. That's 2 days ago, 3 days ago. It goes to 13,354. But wait a minute. Look what happened. It stalled right here. So what I said to subscribers, we've been looking at this for quite a few days, for about a week now. If this 13,330 area in the Dow, 13,330 to 13,340, it actually went higher, went to 13,373 yesterday. But if this entire range is not pierced decisively to the upside with the Dow pushing into 13,410.20 area by the close today or tomorrow, but instead pulls back, we will look at the 13,255 9-period exponential moving average. A close below it would say be careful. S&P cash would say S&P cash below probably it's at 1437 right now, closing below 1428, and we've got ourselves a digestive period. I call it a digestive period. Why? Because the weekly charts are still extremely strong. You can see that the let me just go to the cash S&P because that might help a little bit more because I've got more data there. You see the cash S&P is hugging 93% in the stochastic. That's very strong, and the MACD is still positive. So 1407 would be the real test if there was a sudden downside smash in the S&P. And I'm going one step at a time. For my subscribers, we've already taken a position. It's a very unusual thing for me to do. I've taken a position. We've got a reasonably tight stop. I usually make the stops pretty tight in any case. And in this case, it's a little wider than normal, only because I want a little flexibility. And the reason I've got a short position on one of the indexes is because, and I'll explain when we come back, I think that this index is going to show us there is certain internal weakness on a short-term basis. I'll be back, 877-927-6648. We're back in Joe in Boston straight after these messages.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. And right now, the Dow is up 21, S&P's up $1.77. This is very interesting. The comp index is, where did it disappear to? The comp index is right now. Comp index is up 5 at 31.19. But I had a couple of emails come right in as I was wrapping up the first segment, and we will go to look at UNG, natural gas, and a couple of other things in the futures right now. No, as soon as we finished with Joe in Boston, so we want to go to Joe first. Hi, Joe. How are you?
Good, Basil. How are you?
I'm well, thank you.
Good. Can you look at LNKD in a monthly? Because it did take out the IPO high by a few pennies.
This is, folks, LinkedIn LNKD, trading at 119.87, up 32. It's really interesting that an IPO, which has only been out a short while, is way up in the hundreds. So that to me is impressive, because it says that a stock at that price is probably seeing a good bit of mutual fund buying. So here, listen, what we're talking about, folks. There's a stock that opened at 82.50, went to 122.70, had a round number low of 80, broke that 80, went down to 60, bounced very sharply up to 90, and then, up to 115, and then plunged to a low of 55.98. Now it starts a brand new move. This is the monthly chart that goes to leg A, but below the high that was made in May when it came out as an IPO, the high of 122.70. It goes to a high of 120.63, just underneath, pulls back, holds the 9-period exponential moving average. If you're looking at Tiger TV, you'll see that this is the chart on the right here. That white line, I think, yep, there you can see it. That white line is, in fact, the 9-period exponential moving average. What it does is it powers higher and goes to a new recovery high of 120.63. Previously, now it's at 122.85. The previous high, remember, was 122.70. So 122.85, 122.7, 15 cents. 15 cents, but it's a new all-time high. That's all that counts in the Chapman wave. It also says, looking out, that there's a really good chance that this stock has the potential, Now, I have to say the potential, because it's an IPO, anything can happen, but everything about the stock says, as a long-term buy and hold, this stock should go to a leg C, higher high, and then if there's a peak C, it should pull back and then go to a leg D. At that point, you've got to be real careful. So now let's put that into the context of where would be support. Major support is at 101. That's the 9-period moving average. That's the monthly chart. Now, you're in this, right?
No, I'm not. I was in it. I'm out, but I wanted to see what you thought there was support was on a shorter-term basis, how good the support is at maybe 115.
Okay. Let me go through a couple of charts. If you
Sure.
So many look the same. Folks, we're looking at LinkedIn. If you look, I'm overlapping charts here because I think it's very important for you to be able to see what's going on. This little one that I'm showing right now is the 120-minute chart. It made a peak D with a wide-legged doji. That spells, look out, a rectangle formation could form and last longer than your patience, because just as you're getting frustrated, it should break one way or the other. My eye on the 120-minute chart says there's a good chance that if it tests 116.65, that's just 3 points lower than where it is now, there's a good chance it's made a short-term top and it should be pulling back. And that's the way I would look at the 120-minute chart. The best I can see is a retest of the high of 122.85, maybe slightly higher, but this rectangle is a powerful thing that says this rectangle is like a magnet both up and down, at least for a little while. Now we go to the daily chart. The daily chart made a long-legged doji at that 122.85 level on the 7th of September, but the MACD is strong and the stochastic is slipping. So that says, hey, wait a minute, let's look at one of your favorites. Let's look at another chart that has a very similar pattern. That's Google. Google made a peak E-top in the Chapman wave just the other day at 712.81 on the 10th. It's pulled back. If you look at the 120-minute chart, lo and behold, it's got the same kind of thing. It went to an overlapping D, overlapping C, and then it went to an E. It's just fabulous the way these things work. And if I want to be conservative, even the 120-minute chart recounted gives you a top. So it's got like a double top Chapman wave notation. That says it should pull back, which it's doing in the 120-minute chart. Oh, there's the music. If Google takes out 680, it's going to be pulling back, and it's got a short-term sell signal in the daily. And I'm going to show you a couple of others so that we can put them together. These are the big winners. I'll be right back with Joe in Boston straight off this, and we'll be back with Warren in Denver looking at NG, natural gas.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back, and the Fed came out. I thought they were coming out. I thought this was a preamble to the 215. But anyway, Fed came out. Fed to purchase additional agency MBS at a pace of $40 billion per month. So they're just business as usual, basically. So there's really not much. The parameters that they were looking at are probably they key to what they want to be watching. That's very important. We're going to watch to see if this is going to be a pop and a drop. I'm going to go through these charts now because everything that I'm talking to pertains to exactly what's going on right now. So we're on with Joe in Boston. And Joe, the charts I was looking at, I mentioned Google. If you look at Amazon opened at a round number 259 the other day, hit a 260 round number the same day. That was the 10th. And it hasn't made a new recovery high yet. And yet, there's a lot of stuff going on that says it should have, but it hasn't. If you look at, there was one other one that I wanted to look at.
Can you pull up the 120-minute on Google for a second?
Okay, Goog.
Did that move right there just change anything?
Let me see.
The move it just made?
No, it doesn't change very much at all.
No?
It's up $6. It's up 1%, not even 1%. It's at $6.97.
On the 120-minute? No.
But if the MACD crosses positively, which it isn't now, which would occur if Google went to somewhere around 705, that's not very far. It's 9 points away. I mean, It's not far for the stock. Yeah. Then all of a sudden, that'll be the test. But at this particular point, let me do something else because we've got Warren waiting on the line. But I think it's really important. If I look at the pop that we just got, leg E up into the rectangle formation in this is what I show my subscribers every day, in the 120-minute chart. Look what happened. The magnet of that level is so strong that the price is right back in there. So I'm saying to myself, if I put everything together, and now I want to get rid of this just for a moment, I want to get rid of this particular chart. So let me just take it off for a second. So close workspace, and I'm going to go to my white charts just because it's a little easier, and I know some folks like to print things out. So if I go to, and this was the study that I did for my subscribers this morning, if I go to this background here, this is the Qs. The Qs and Apple. Oh, that was the other chart I wanted to show, the Qs and Apple. If you look at the Qs, that's the PowerShares QQQ Trust, that same pattern, that spike to a leg E or an F or a D that we just saw in the other charts, occurred with the Qs on the daily chart when it went to 699.55 with two numbers, consecutive days of exactly the same price. So I'm saying, hey, the MACD and the stochastic on the Qs are terrible. If I look at Apple, the MACD and the Qs are the MACD and the stochastic is terrible on Apple. So I'm looking at this as a leg F to the upside, and unless Apple takes out 683.29, and really it can't double top, it's got to take it out and go to 687, actually 690 it really needs. I think that Apple's made a short-term top. I know it's hearsay because we're talking about one of the best stocks in the market. I think it's going to just digest these big gains for a little while. That's what I'm looking at. But I'll only know if Apple in the next week closes under 656. That's all. So I wanted to say to you that all the things I'm looking at made no difference what the Fed was about to say. I was looking at chart formations. If I look at the chart of the TF, you didn't ask about it, but I'm going to do it now because I'm going to some other charts in a moment with Warren. If you look at the TF, which is the mini Russell 2000, it's in leg D. It's holding really well. I won't get a signal on this because it was one of the strongest stocks, and unless it takes out, it's at 843. That's the futures. It's a September. If it takes out 838 in the next day or two, well, of course, by then we'll have moved to the December contract, but the equivalent, if it takes out the low of yesterday,
right,
that will say, great, now you can see a bit of a consolidation at 834. If instead, by the end of the day, the day's young. By the end of the day, we know that on a day like this, the day's young. If it takes out 852, then all of a sudden I'm saying to myself, hey, there's just enough strength, and it's shown in the XLF and GE. That's why I keep saying it's a rotational market. That's why I don't think we'll have anything more than a bit of a pullback rather than a smash to the downside, because they're rotating. There are so many good stocks that are holding well. So your question was LinkedIn, and my answer to you is I would ignore the market because it's in a sector that got beaten down earlier with Facebook and all. Now some of them are coming back. I like the pattern, but it could pull back to the 116 support level on the 9-period moving average in the daily. At this point, it's actually holding well. It's this double top formation that I got to watch real closely in the weekly, because if it closes under 115, then all of a sudden it's saying, hey, I've got weakness here, but the MACD is strong, the stochastic strong. I like the stock very much. I think in this period, if we do get a digestive phase, some of these stocks that are under the radar are going to do very well. And I think LinkedIn could very well be one of those. Hope that helps you.
All right, Basil.
Thank you very much. Let's go to Warren in Denver. Hi, Warren. How are you?
Hi, Basil. How's it going today?
Very well, thank you. Well, so far. You
sound good on Larry's show.
Oh, thank you.
And I love listening to that, all about Google, Apple, LinkedIn. Those are all really key stocks to the Qs.
Very important. They are very important stocks.
You didn't really have to hurry off to me. I'm like short natural gas by virtue of the fact that I'm long Westlake Chemical at about 70.96.
Give me that symbol again, Westlake Chemical?
WLK.
WLK. Okay.
And the lower natural gas goes, the better it is for WLK.
Okay, yes. And with WLK, folks, you see, chart patterns repeat over and over and over and over. If you're looking at WLK, which is Westlake Chemical, and that's a great call, and our listeners really, I'm sure, appreciate it because you've called in before on this. It's broken out to a new high. Remember we were talking about LinkedIn, the monthly chart just snuck above the previous highs? This one hasn't just snuck above, it is decisively above the previous high of 67.77 back in May of 2011. So far, this is a very positive chart. The weekly chart shows no signs yet of letting up. even though it's got a cup and ladle breakout pattern, which should go to a peak D, and it's still in leg D. So far, that's very good, and the MACD is still very strong. Now let's go to what you were talking about. If you don't mind, I'm going to go to the December contract, because that's the one I've done the most notation on.
That's fine.
The charts will be exactly the same, except that the prices will be different. Now, folks, we're looking at natural gas. Spiked up to $3.418 this morning. It's pulling back. If you look at the 120-minute chart, it made a peak F top. I'm sure you're pleased to hear that. Made a peak F top at 3.415 this morning, 8 o'clock. Yeah, way. This is a 120-minute chart. Must have been overnight. And what's happened is it's got a sharp pullback. Now, this is what you would expect. Now I've got one of the emails was asking about UNG, which is also natural gas. That's the ETF. Now, the patterns are not exactly the same because they trade a little differently, but I'll go to that in a moment. Let me just say that the natural gas contract, which is down 0.059 right now, it's at 3.35. If that holds, the worst case basis right now is that the 3.241 would be the support, 3.26 on the daily chart, and the 120-minute chart is 3.24. That's what it looks like it's going to do. And I'll tell you why the worst case, because the MACD is strong and the stochastic is moving up, but it's at 71%. It hasn't gone to 80%. So if you are short, what I would say to you is this. If this natural gas contract starts to get to 3.35, if it starts to get to 3.38, I'd be a little bit careful for two reasons. One is that a break in the afternoon to the upside with it closing more towards the upper level says that the MACD would start to improve a little bit. So that would say you've lost the action of the negative chart pattern in the stochastic and the MACD, because the price has, if the price goes under 3.30, then you've got yourself a completely different ball game. Then I think natural gas will drop very quickly, and then it'll go to the 3.26. But right now, on the daily chart, the technicals are a little stronger than the 120-minute chart. I have to consider this could just be a bit of a pullback, and most importantly, what I'm looking at is if natural gas starts to close towards the high of the day, and this is, I have to call this leg B just to be conservative because it didn't break the low of 3.055.
That's an AB up right there. I mean, that was kind of one of my questions, actually. If we're going to, maybe it either fails here or it goes on up, it would be an AB failure.
Okay. So, and what's happened is that it's gone to peak A. I called it an A minus. It's really an A because it got reignited once it went above it without breaking below 3.055. So on this particular contract, it's made a slightly higher high. I can move the B to the right. It could pull back for a day or two, but I'd just be careful. The speed with which it's moving says that if it starts to move towards the upside, just be a little bit careful. But you want to see by the end of the day that it closes right about 3.34 to 3.33 or lower.
Okay, that's on the December contract.
That's on the December contract, correct.
Okay, got it, Basil. Thanks very much for looking at that. I'll hang up and listen to if you're going to do UNG.
I'm going to do UNG as well. You can stay there. I'll tell you what, you just stay there, and I'm going to show something about UNG, which is just a little bit different. Okay. UNG, folks, is the United States Natural Gas Fund. It is trading at 20.08. It's had a fabulous move, a different move to the natural gas contract. That's why you have to always, I don't trade these. Well, sometimes I've traded the UNG for subscribers, very seldom. But the people who trade these know which month to trade. They know the backwardation, forwardation of all these different contracts, etc. I just don't do that. So I'm looking purely at a chart pattern. And now you can see here there were higher highs and decidedly higher lows coming in, and it's got an inside bar so far today, and it is so far a peak B, whereas the other one made a new, the contract, the futures contract made a higher high. This one is not. This has got an inside bar, so it's got a peak D in the daily. I'm going to say to you, I would I'd use the two together just as a gauge, because the UNG only trades during the daytime, during day hours, and the other contract trades overnight. So yeah, you've got a gap, and that says that if UNG takes out the low of 19.55, that 1945 9-period exponential moving average becomes very important. But right now, it's actually, considering it's made a peak D top in the second peak D in the 100. Folks, I just wanted, for those of you who are looking at this contract, if you're looking at Tiger TV, look how often, and I'm sure you're beginning to see this as well now, Warren, look how often you can go from a low bar, especially in the 120-minute charts, to a peak D and then have a very sharp pullback. That's one of the techniques. It's one of the things I found over the many years I've been doing this. So this is, if you look at, I'm going to do this as if it was a one-to-one. I sometimes do this. I love doing this. In fact, I go like that, and I go click. I'm going to explain what I've just done. What I've done is I've given the price parameter and the angle of the first move from the bottom to the peak D, and then to the most lowest low on the at 1330 on the 7th at $17.99. And you can see this is much higher than that same parallel move. So what it says is that that level right there, around about 19.73, that would become very important support if it was to break down. So go step by step. You're in the short position. Don't have to get excited. Watch the price move. But if it starts to climb a little too high, you could lighten up a little bit, because they are separate. You've got a stock that's doing really well. This is a little bit different because it's based on the futures, it's based on expectations and many other things that have slightly different implications. So I hope that helps you, Warren. And the other thing is this: if you know that if UNG takes out 20.65, it starts leg C up, and that inverted candle, that inverted hammer from the 9th going to 21.35 could very well become a target. Hope that helps you.
Yeah, that does, Basil. And I want to tell you thank you for hooking the S&P and the Dow together. Very few newsletters do that, Basil. It's a really cool thing that no one sees that doesn't subscribe to the newsletter.
Well, can I just, while you've said that, let me just show for folks who hear many people say the Dow is only 30 stocks. How can I disagree? Of course the Dow is only 30 stocks. I'm showing this chart right now, and I'm going to defy anyone looking at the charts to point to which one is the Dow, which one is the S&P, and which one is the NDX. The one at the bottom is the transportation index. Right? I mean, that's...
Right. Exactly
okay.
Right, Basil. And you hook those together so beautifully that I think a lot of people just don't understand, that don't take the newsletter, how that happens with you.
Well, thank you so much. I appreciate that, Warren.
Okay, so I got to hang up, Basil.
Thank you for calling.
Thank you very much.
Okay, folks, now let's just go through this, because this is really, I don't know what's going on at 2:15. I thought that was the Fed announcement that was coming out at 2:15. Maybe it's early today. There was a 2-day discussion with the Fed. All I can say is the price is the price. I don't care what's happened. Let's go through what we're looking at. The 120-minute chart of the Dow has just extended up in what has to be considered G/C. In the Chapman wave, that says, don't deny that it could be a brand new buy mode that's going to go to a D. That's number one. The volatility index has fallen to 14.80. I'll be back straight off this. Basil Chapman sitting for Larry Pesavento. Dow's up 84, S&P's up 9. Be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi everyone, Basil Chapman sitting for Larry Pesavento. Okay, very exciting time this. Now, this is what, let me just do this. This is the GLD. The GLD spiked up, it was down, then it spiked up, hit the 9-period exponential moving average in the daily exactly. Now I've got a parallel wave count leg G/C, but there's nothing wrong with this chart yet, so I don't need to make a decision whether it's a G or a C, just to say that it's made a new recovery high. The stochastics at 89%, MACD is still very strong, so there's no sell signal yet in the GLD. That's number one. The SLV. The SLV is the same sort of thing. It's made a new high. This has to be considered an A, B, C. It could possibly be a D. So far, the stochastics pulling back a little bit, but it's still at 80 and 90%. MACD is good. Hey, nothing there. So we've got to jump over to the EUR-USD. The EUR-USD, and I believe I'm current. I might be behind because this is the service that I've got. It's trading at 1.289. It's making a doji, leg D, just above. You remember I spoke about the moving average, the 200-period moving average, how important was in my work, sacrosanct, to say that here on Larry's show he never uses moving averages. But I do. I only need it when I need it, and right now I need it because it says that the line of 1.284 is the magnet line, and it's gone above it once in the daily, again today. If it starts to close underneath yesterday's low of 1.281, then all of a sudden the 1.276 is is the 9-period moving average, which it should test, but there's nothing wrong in the technicals. So all of a sudden you've got those bullish indicators. That's the stock market holding up very nicely. You've got the euro and gold, and those are important because they kind of go together. All of a sudden you're looking at the VIX, the volatility index, pulling back in this pattern that we call the dreaded H. Well, that says at 14.73, that is buying intensity. So as long as that volatility index doesn't push into the 17.90 to the 18.50 area, it says so far that there could be buying pressure. But let's put it together with the dollar, because those, the three bears, the dolly, VIXie, and Bondi, go together. Well, the dollar is attempting to make some kind, like the euro is making the doji at the top, so the dollar's making a little doji here, but the stochastic's absolutely flat. There's no energy there, so I can just anticipate that the dollar could have a pop-up from the 79.70 area to maybe the 80.70 area, and that's where you get a real test, if it does that, of whether it's going to build energy and the market's going to be pulling back. So far, that hasn't happened. But at the same time, I was showing Joe, and bonds. So TLT came smashing down where? Right on the 200-period exponential moving average of 120.2, I think it's 120.69. The low today is 120.27. It's trading at 120. So far, bonds are saying there's that dreaded H pattern. A close below 120.52, that's a close. Decisive close below says, be careful, you can bounce up, but you're going to come back and retest the lows. That would be a market positive. At the same time, I'm getting a lot of stuff in. I'll be back tomorrow at 11 o'clock for my usual Tiger Technicians Hour. Don't forget, you've got coming up next, I think it is the Diagnostic. Yep, the Diagnostic Hour with Daryl Martin, a fabulous program. Then you've got Dave White, then you got Ken Sharif. Is this today? Thursday. Thursday. You've got, and then Ken Sharif, and then Tom O'Brien. So, looking at the charts, at this particular point, the TLT is breaking lower. On the weekly chart, if it closes on 120.52, that's going to put some power into the market. The charts that I was looking at that was so important, like Google, are saying there's a chance that these real big heavyweights are going to take a little bit of a breather here, and other sectors are going to take up the slack. That's why I call this a rotational market, and we're going to be watching the cues real closely here to see what they do by the end of the day and into tomorrow. Hey, thanks for being here, everyone. Basil Chapman sitting in for Larry Pesavento. I'll be back tomorrow. My service is the opening call. Go to the front. Oh, don't forget the Tiger Dollars. Tiger Dollars, Tiger Dollars, Tiger Dollars, Tiger Dollars.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.